I was probably like 2 weeks into my job at Amazon, and we had a meeting with Jeff Bezos, and the team had created this like 6-page single-spaced memo. I remember sitting in the room and being very nervous, even back then with him, and it was him looking around the room and saying, "Read," and he just puts his head down, and 45 minutes of silence.
There's this amazing story of Jeff hearing of this anecdote that it took like 19 minutes for customer support to pick up the call. And he asks the customer support director, "Is this true?" And he says, "No, it takes like 30 seconds. He says, "Okay, let's find out." And they're all in the room and he dials the number and they just sit there in silence while they're all on hold.
I would like every employee at Docusign to be able to get in an elevator. And if somebody were to ask them, "Hey, what are the most important things going on in your business today?" they could articulate it. How do you make the stock price go up? Or how do you get long-term return for shareholders? And my answer is always like, deliver results. That's how we all should act, I think, at companies, which is we shouldn't take our relationships with our customers lightly. We talk about this all the time. Over 1.7 million customers is a huge asset for us. We appreciate them greatly. Our success in the future is going to come from getting them to use us even more.
Is this thing on?
Yesterday's price is not today's price.
Today on Run the Numbers, we're joined by Blake Grayson, CFO of Docusign, a company that didn't just lead the e-signature revolution, it became the shorthand for the entire category, and a verb. With over 1 billion users, Docusign is one of those rare SaaS businesses where network effects meet enterprise-grade complexity. And Blake is helping shape the next chapter, intelligent agreement management. Before stepping into the CFO seat at Docusign, Blake spent over a decade at Amazon where he cut his teeth in some of the company's most operationally intense businesses, including AWS and early grocery bets. That background gives him a rare dual lens, a deep understanding of financial storytelling, and a practical sense of how strategy actually hits the ground. Seriously, this is the guy who ran the FP&A group that did the early AWS forecasts. In this episode, we talk about what it takes to evolve a beloved product without diluting the brand, why pricing is as much about positioning as revenue, and how to communicate the mechanics of go-to-market without putting your board and investors to sleep. We also dig into capital allocation, risk, and why not every big bet needs to pay off to shape the CFO you become. All this and much, much more after a short word from our sponsors. A messy or missing cap table might not just slow you down, it could cost you your next fundraising round. VCs get flooded with pitches, and if your equity is confusing or missing, they'll move on fast. Fidelity Private Shares is an all-in-one equity management platform that helps you maintain a clean cap table, an organized data room, and a clear equity story. Schedule a demo at fidelityprivateshares.com, mention Mostly Metrics, and get 20% off. Are you running a small or mid-sized business? Then you need more than spreadsheets or basic tools. You need Sage Intacct, the all-in-one cloud platform for accounting, ERP, and financial management. It's built for businesses like yours across industries like retail, financial services, logistics, tech, professional services, and more. Sage Intacct outperforms QuickBooks, beats NetSuite on flexibility, and delivers fast ROI, up to 250% with payback in under 6 months. Rated #1 in customer satisfaction for 8 straight years. That's not luck, folks. It's Sage Intacct. Check out the Sage Intacct financial management platform using the link in the show notes below and take control of your growth. This episode of Run the Numbers is brought to you by Mercury, business banking for founders and finance pros who want their financial stack to actually work together. Now, I don't plug tools I don't know or intimately use. I've been a Mercury customer for a couple of years now. In fact, I showed the Mercury dashboard to their CFO, Daniel Kang, from their finance team right before we hit record on this episode. It felt like a full circle moment. And what I love most is that Mercury isn't just banking, it's operational confidence. I can send a wire to a podcast editor, I can check capital balances, and I can approve a payment for a freelancer who helped me with a tech stack report, all without bouncing across tabs or praying a PDF exported correctly. Mercury's making a bet on builders. Whether you're issuing your first invoice or wiring 7 figures for a warehouse build-out, it's banking that scales it with your ambition. Visit Mercury.com to apply online in minutes and see why over 200,000 entrepreneurs choose Mercury to run their business finances smarter. here comes my banking voice. Mercury is a financial technology company, not a bank. Banking services provided by Choice Financial Group, Column NA, Evolve Bank and Trust, members FDIC. The IO card is issued by Patriot Bank, members FDIC, pursuant to a license from MasterCard. Blake, thanks for joining me on the podcast.
Thanks for having me.
I have to say, I am a customer. I'm a happy customer. And I think I've interacted with Docusign probably like, it's got to be top 3 CFO tools I interact with on a daily, weekly basis. So this is pretty cool to have you on.
Oh, thank you. That's super nice to hear.
So you got to confirm this stat with me. Is it true that Docusign has touched over like 1 billion users at some point?
Yeah, the way we think about that is over 1 billion signers is really the way to think about it. So it is one of these rare companies where you tell people where you work, even if you're not like a mega cap, company. And most adults have had an interaction with DocuSign at some point, right, in their life. And so that's pretty fun. It's kind of a unique opportunity.
We were speaking to John McCauley, the CFO of Calendly, and he said, we're not the biggest company in the world, but if I tell a parent on the soccer field at one of my kids' games that I'm the CFO of Calendly, like that has more name recognition than like companies that are even way bigger. DocuSign is a really big company doing over $1 billion per quarter, I think, at this point. What role do network effects have in your business, Blake?
Yeah, I think that, our scale is one of our biggest assets, I think, that we have. There's, like I was kind of referencing earlier, there's not many companies out there in the world that, are under a 50 or probably even $100 billion market cap, where most people, when you say where you work, have actually had an interaction with it. And on top of that, an interaction that's generally quite positive, that people, it's one of the super fun parts of this job, that when you get to hear the anecdotes about it speeding up somebody's life and making it easier and making more trusted, giving them more confidence and all those kinds of things. So I think that because customers trust us with their agreements and their users, like their own customers, their signers also like it, that has a network effect for us, right? That it's kind of rare. I have anecdotes just in my kind of experience with investors or other just people I know, and they'll say things like, hey, if I get something, it needs to be in DocuSign because I just don't trust it. And I'm not saying that you can't trust anything about DocuSign, but I just think it's the brand and the goodwill that we've built up over, almost 2 decades.
I think it's brand, it's goodwill, and it definitely has a premium element to it. I mean, it's not the cheapest solution around either. When I think about a name like Kleenex to tissues, or Vaseline to petroleum jelly, DocuSign is that for e-signatures in a lot of ways. That ubiquity is powerful. I'm curious, does it ever actually limit your narrative when you're trying to explain the broader vision of intelligent agreement management? Like people latch onto that immediately?
Well, I think it's definitely what we're known for. I mean, I think that's something we have to embrace, and we do embrace, which is, I think it's fair to say we're the default, e-signature kind of commitment phase company in the world. Now with that, we've got some educating to do, right? We're actually building out a new platform that goes way beyond just the commitment or the signature, but beyond to both, the prior kind of creation of an agreement. Then you commit and you sign it, which is awesome, right, for the customer. And then you got to manage that agreement along the way. And what insights do you get from it? We are now really trying to expand and transform DocuSign. So it's one of these things, like I would never say it's a detriment. That's an amazing place to be. We just have to take advantage of it. We have to educate our customers on it about all the extra value now that we can create for them, and being able to power the entire agreement journey using AI is something that we think we're in a great position to do, and we just have to execute against that.
And I've heard you speak to that opportunity, and it's so true, because the signing of something is like an event in and of itself, but there's so much that goes on before and after.
That's right. I think sometimes, and I would say this is an asset of ours, is that the simplicity of the signature moment, it can sound pretty simple to somebody, right? Like and I don't want to equate it to, it's kind of hard sometimes you equate to other things, but buying something online is also simple. There's a lot that goes into the back end for that, right? Whether it's on trust or compliance, and whether you're integrated across different companies and how your data is managed. That kind of a simplicity for us, I think, sets us up pretty well if we can be able to articulate and educate our customers on it. I mean, we did a rebranding of our company on our logo and such maybe a year or so ago. But one of the key things we did is we kept the name, like DocuSign. Like that commitment is a super important part of the agreement lifecycle. A lot of people would argue it's the most important part, but there's so much more that goes on with that between when it gets created and then when it gets managed. We're really excited about kind of helping that with, that opportunity with customers. As people think about their agreements, and the average customer right now for us, and they have thousands of agreements. I think that sometimes comes as news and to people. And then as you get larger companies, you get tens of thousands, hundreds of thousands, and millions of agreements that you can look at. That data and those insights are kind of trapped for a lot of companies. And there's some really critical things in there. And as a CFO, it really resonates with me. And I'm probably you and maybe with your listeners, is that you think about, you sign a contract and it says, hey, these are examples, there's volume tier pricing. Once you go above X volume, you get Y discount or Y benefits. And who tracks that? And how do you know what they are? And if I say to you, hey, where's that agreement located? A lot of it is well, it's in my inbox. I could probably call legal, and ask them if they've seen a copy of it, which, by the way, is it the final one? I don't necessarily know. Is it in a SharePoint somewhere? Is it multiple SharePoints? Who tracked it? And there's a lot of kind of confusion out there, which hopefully we can help people really kind of take advantage of.
Oh, totally. The number of times, Blake, I've searched in my inbox with the keyword Docusign and then some vendor that I did an agreement with, it's probably in the thousands.
Right. And I would argue you can imagine as you get to be a larger and larger company, how much more complicated that gets, how much more value is still being left on the table. And even the most basic things, you can imagine, if you're a company and you have 6 offices, let's say, around the United States, around the world, whatever, and it's, hey, when do my real estate leases come up? And if I have equipment leases, let's just say I lease my laptops, or whatever, what's the timing for that? And do I have an auto renewal clause that if I don't, run into to check this, I'm in trouble? I mean, in my own career, in prior companies, I've gotten burnt because an auto renewal clause was missed. And so I took a significant amount of my time in my life to deal with something that I didn't have to deal with at all. And if you had a better way to manage that, gosh, I think it would create a ton of value for companies.
That's like an if you know, then you know for CFOs. Every one of us, I guarantee, has one auto renewal clause that we've been burnt by. And if you can avoid just one of those, it pays for whatever you're using in spades.
Oh, it's not even, for me, it happened to me. I worked at Amazon for a long time, and that's obviously a huge company, but it was a potential millions and millions of dollars of an impact. I was able to take 9 months out of my life and spend a little bit of time every day trying to get out of this thing, and didn't, but negotiated and got out of it. And frankly, it wasn't because I'm an amazing CFO at all. It's because I work for a really large company that had a lot of influence, right? Whereas most companies don't have that. And they got to be able to track it. They got to understand, what decision points are coming up and how do I figure that out? And I think that, as part of that role for CFOs of managing risk and unlocking growth, that's an area where you can actually tangibly say, oh, that's how something like AI could actually help me. And it's not me trying to discount other things that people are doing, but at least for me, my brain, it's super tangible. I can actually, kind of understand it.
I'm totally there with you. Something that we talk about on the show a lot is pricing. And if you bear with me for a second, I think you're a case study in a lot of ways, because Docusign was doing usage-based pricing before it was cool. Now with intelligent agreement management, I think you're leaning back into seat-based. Do I have that right? Are you zigging when the rest of the industry is zagging?
In this first phase of growth that we're in, we are moving to a seat-based model. What I would say with that is it is super early days for us, right? We are just now kind of growing in the enterprise space, and we'll see how that pricing and packaging kind of model evolves. I think that one of the, we were talking about this earlier, CJ, which is the simplicity is one of the hallmarks of our design at Docusign. And so I think seat-based pricing, at least for now, provides some of that similar simplicity, if you will. But we do also recognize, and especially because we launched IAM predominantly in more of our kind of commercial and small, medium business SMB segments. As we kind of evolve more and more in the enterprise, we're going to watch all these models get developed. And we recognize, and we're testing those things with some of our larger customers. And we'll have to see how that all goes, because I'm really curious to learn from other CFOs as well. We're going to be buying these from other SaaS vendors that we work with, but it's how do I, as a CFO, have guardrails? on the spend that I have, right? And what are the tokens or credits or however you might structure it to do that? And so we're actively thinking about it. We're actively working on it, but you're right. The pricing today for us is primarily seat-based.
Hey, thanks for listening. We'll be right back after a word from our sponsors. All right, I got to get up on my soapbox for a sec here. Everybody's talking about AI-powered this and automated that. But here's the thing about revenue recognition. It's not just about moving data around. It's about getting it right, full stop. So RightRev is laser focused on one thing, RevRec that auditors actually trust. See, there's a difference between automating revenue processes and automating revenue recognition correctly. RightRev was actually built by the godfather of RevRec, who understands ASC 606 compliance, audit controls, data validation, and the flexibility needed for complex B2B contracts. We're not trying to be your billing system or your ERP. We're the revenue recognition engine that sits between your contracts and your financials and making sure every dollar is recognized correctly, on time, every time. Companies like Snowflake and Logic Monitor don't just need fast revenue reporting, they need revenue reporting that's audit ready from day one. And that's honestly where RightRev shines. And what I love about RightRev is they're not out there trying to be everything to everyone and just slap some, AI slop on top of it. While everyone is building these massive platforms that do everything in a kind of mediocre fashion, RightRev does one thing exceptionally well. They make sure your revenue recognition is bulletproof. Ready to stop gambling with your RevRec? Visit RightRev.com to see how we make complex revenue simple. That's RightRev.com, where revenue recognition actually works. Did you know that around 40% of manually processed invoices contain errors, missing data, bad codes, duplicates? And those mistakes don't just slow your finance team down, they cost you money. That's why global finance automation matters. It's not just about saving time, it's about keeping your business safe from costly errors. And that's exactly what Tipalti does. Tipalti is the serious AP solution for serious business. Tipalti automates the end-to-end payables process, handling everything from onboarding suppliers to global payouts, all so your finance team can breathe again. More than 5,000, of the world's most ambitious businesses already rely on Tipalti to make payments in over 200 countries and 120 currencies. With baked-in security and tax compliance, Tipalti gives you the confidence to scale globally without adding extra finance headcount. Give your finance team their time back. Don't let bad invoices drain good money. Visit Tipalti.com/run-the-numbers. Tipalti.com/run-the-numbers. Tipalti, serious AP for serious business. So if you listen to this podcast, you'll know that I am incredibly passionate about the FP&A space because that's the route I went to get to CFO. And I want to tell you about a tool that has exploded over the past few years. It's called Aleph. And I remember getting outbounded by them about 2.5 years ago, and I actually took the bait because they claimed to be able to do a demo with my live data, with me right there on the call. And so I had to see it to believe it. And it was the founder running demos back then. Shout out Albert, hope you're listening. And he connected my NetSuite and built my P&L using their Excel add-in in like 15 minutes. And I was really impressed. Since then, Aleph has gone on to raise money from some of the top VCs out there, and they've built an impressive roster of customers. Many of their customers have been on the podcast, like the CFO Turo, 8 Sleep, and Zapier. They're all really big champions and supporters of Aleph like me. But it's not just an Excel add-in. Aleph also allows finance teams to work with their live cross-system data using Google Sheets and their web app. And that's cool because it gives teams the option to support a wide range of needs and workflows like budgeting, forecasting, and variance analysis. And speaking of variance analysis, they're doing some really cool things with AI-powered variance analysis. It basically allows you to figure out what's going on and why, and it takes the time that you'd usually spend from hours to minutes. It's really cool. And so I highly recommend checking them out and taking them up on that demo or trial, just like I did back in the day. And you can learn more and get started at getaleph.com/run. That is getaleph.com. aleph.com/run. Tell them CJ sent you. To your point though, knowing you have, I'm just making it up, 10 agreements or 10 envelopes per month to use, it's a great way to just occupy simple space in somebody's mind. It's also a great way that if you're getting value from it, you can go to the next tier pretty seamlessly. And you're doing it because you're using the product the way it was intended to be used.
Yeah, and there's positives and like you just noted about it. There's also challenges too, because if your business gets a boost of energy through it and you want to make sure you're running, hot and you want to keep going, we can help you do that. The beauty also too for us on our new platform, which is IAM, is that e-signatures bundled within it. So it all comes together. It's like, I think in some cases, other companies are saying, well, my AI functionality is this add-on, right? Or it's this new incremental. We're treating this as kind of like, this is one bundle or a package for you to be able to manage your agreements. Signature's part of that, definitely. And so I think that e-signature glue for us is really critical. It's also the relationship we already have with our customers. We've got over 1.7 million customers out there, right? That use signature. And so we should take advantage of that and provide them that kind of added value beyond that commitment phase. And so we're really excited about that opportunity.
And you have such a large customer base. That's a beautiful thing to launch a new product into. As a CFO, though, I bet in your seat, you have to think, now I have to forecast this. Like at some point, it's going to have an attach rate. It's going to have to show up in a spreadsheet. Can you just walk me through how you wrap your mind around like having to launch a new product and trying to figure out like what you're going to sell off the back of the truck?
Yeah, it's this is a big transformation for Docusign, right? Like we had e-signature agreements, we managed those. We just launched IAM about, I guess, in earnest, maybe about just over a year ago. So still early days, but trying to forecast, okay, one of the things we have going for us is we have a renewal cycle for our customers, right? So, you generally have customers come up every year or 2 years or 3 years, for us, the average tenure of our contract is just over a year and a half. It's like 19 months. So we got, generally multi-year agreements with folks. And so when those renewal cycles come around, that's the natural time to have conversations with customers. So you can have in advance, you have those conversations about IAM and such, and what's their readiness for it and those kinds of things. And then you're exactly right. We have to sit and say, okay, we work with, our chief revenue officer about trying to estimate, what is that, if you want to call it attached, but it's almost like a mix shift in a way, because you're not leaving e-signature, you're really more shifting to IAM if you're an existing customer because you're getting e-sign with it, right? So it's not like it's fully incremental, although there is expansion that you get, obviously, because you're adding a bunch of extra value for customers. Trying to forecast that, it's like we got a big base of customers, so that's good, right? So you can hopefully kind of see that, how that rolls out. But it's also the enablement, like with your go-to-market team, right? It's like you have reps and you have customer success folks that talk about renewing and expanding customers up to this point, up till about a year ago, in just signatures, in envelopes. But now it's so much more. And so, we track a lot of, I'll call it input metrics with our go-to-market teams around who's having conversations, how many conversations are they having, when people don't want to go to IAM, why? And what can we learn from that? And then how do we work, improve then when we enable it with other customers, and highlighting those reps that are actually having a ton of success with it so that we can share those learnings with other reps so that they can even do better and they get more excited.
That's a beautiful explanation, because from the outside in, it's this daunting task that you have to undertake. But if you break it down into renewal cycles and then the activities or input metrics that go into it, it's digestible, right? You can actually put some metrics to that.
I would say we try to meet the customer where they are. I mean, you obviously have some customers who kind of heard about this platform and they're excited about it. And maybe they have 6 months left on their contract and they say, hey, I want to do an early renewal with you guys because I want to spend a little more money with you because I want to get this extra value. And so obviously we're thrilled, to have those kinds of conversations. But then also you're educating as well with customers about, let me tell you something about this extra value that you can have. The nice thing for us with IAM is that when a customer signs up and upgrades, we can get them launched in IAM like in a matter of like days and weeks, because we already have likely the bulk of their agreements with them. So we can create an intelligent repository for them pretty seamlessly. And so that's kind of different from a lot of SaaS environments, right? Where you have to like spend a lot of time to integrate and, educate and such. And so we, while we still have to educate people, we can actually show them value pretty quickly. And then hopefully they communicate that within the rest of their organization as they're able to get up to speed.
Reflecting on what you said, Blake, I also think it's important to call out for listeners that you have to educate your own Salesforce, your own customer support. Oh, yeah. You can't just be like, hey, new product, go sell it, because that'll mess up your forecast if your own people haven't sequenced this right to be ready.
That's exactly right. Like I would say, I took this job, about 2.5 years ago or so. And, Alan Tegason joined maybe 3 years ago or a little longer. Well, we were spending most of our time on the product side, right first, because you got to build the product and the platform that people want. In the back of our mind, we also knew we had go-to-market work to do as well. And so Paula Hansen came in. She runs our go-to-market teams now. And we had to really think about how are we going to enable them? How are we going to provide them the training they need? This is a lot deeper than a signature. And so how do you not make it too complicated for them? Because if it's too complicated for your sales team, it's going to be too complicated for a customer, right? That you're going to be working with. And so we had to be really cognizant of it. We still have work to do, across our go-to-market teams, but I've been really excited that how much teams are embracing it, how much we're finding that when they do embrace it, they're more successful. And so trying to share that, because that's obviously the best evidence you can provide to a sales team, is that when you actually get this, it works. And so I think that, it seems to be, we kind of build momentum every quarter, and, it's still early for us, but I'm super excited.
I was at a software company once, and we had a really big seasonality concentration in Q4, and we were getting ready to launch a product, and it didn't go as planned. We weren't able to get it out on time. It was like 4 months late, but it pushed into like Q1, Q2 of the next year. But it messed up how we forecast the business because we were trying to do it based on renewal cycles and figure out who'll be ready to buy it then. But if you've passed this compelling event, all these compelling events in Q4, it's like, oh no, we all had to be aligned here.
Yeah, I think, Q4 is our biggest quarter as well. I would say not in a massive way, but we do have to plan for it. I think one of the things that we did, which I think worked out really well for us, is that we really launched first in our North American commercial segment. And, that's a high volume segment for us, maybe lower average deal sizes and such. We got to learn from the mistakes we made, even on what metrics matter, right? And so whether that's, is it really sales, but what about getting them to use it, like adopt it, right? After they sign up for it. And then looking at that on a vintage basis and saying, okay, a customer that, uses IM, and after 3 months, what do they look like? And after 6 months, what do they look like? That was something that I've learned in prior companies as well. And so if you can continue to think that you're making ground on a vintage basis, then your new vintage, like your new customers that come on, you should be better at it. You should be able to kind of accelerate your performance. Yeah, I would say it is tricky to forecast new products. I would say that for Docusign especially, it's like moving from a single product kind of platform to a multi-product platform. Right now, IAM is one whole platform, but we do so much more with it that it's tricky. But I guess I'll always take that problem, right? Where it's like growth. If growth is your problem, awesome, bring it. Because, it's one of those things like this. I think as CFOs go, you recognize, if you've been around long enough, you recognize that finding elements to drive growth is a lot harder than finding elements to reduce cost. When you have those opportunities, it's super important to try to take advantage of it as best as you can.
Well, you teed me up nicely because I've listened to a bunch of your earnings calls, and you described the 3 legs of your go-to-market stool: direct, self-serve, and partner channels really well and concisely and clearly. And so, Blake, I'm actually less interested in the answer, which I kind of just clued people in on. I'm more interested in the way that you tell the story. Do you have any advice for CFOs who are trying to communicate their go-to-market and the resulting revenue streams clearly?
At the end of the day, every business model comes down to a few key elements. If you cannot crystallize your business down to those few elements, I think you're going to be disappointed with how not just investors receive that message, but your employees as well, and also obviously your customer. The way I think about it is if we're doing our job correctly, I would like every employee at Docusign to be able to get in an elevator. And if somebody were to ask them, hey, what are the most important things going on in your business today? They could articulate it. Almost as importantly from an employee side would be, how do I affect that in what I do, right? Like there's a lot of people, especially like if you're not really customer facing, where people can struggle for that. And finance is an area of that. I mean, and so it's like, for me, if I have people that work in billings, right, or collections and such, and them be able to say, hey, when customers reach out for questions, I want to build a seamless experience so I can answer those questions immediately, and sometimes not even with my own actions, in order to make it a better experience for them. And then that's how they then take kind of a customer first lens to what they do. And then they feel empowered in order to do that. I think that's super important. I'd be remiss that, this is one of the things that he does so well. We hired a head of investor relations for us. His name's Matt Sonnefeld, and he came in and he really helped us crystallize and say, like, what does like, what are the true legs of the stool that we have here at Docusign? How do we think about them? Is this fundamental? Like, are we working on this every quarter, right, going forward? And if we are, we should be able to communicate that to investors, because I really go by the adage, what we say to investors should be how we run the business. I think that's the most important thing. I think where you get into trouble sometimes, and it could be as you're talking about metrics or you're talking about things that people in the company don't feel connected to, because then something's wrong. Either you're not talking to your employees enough right about the strategies, or you're producing metrics that you really don't manage against. And so that's super critical to do.
This is great because at first I came at it from the perspective, Blake, of how you communicate it publicly to the street. Reflecting on what you said, you're saying how important it is for the people inside the company to be able to attach their day-to-day work and their efforts to the three legs of the stools, or whatever you're trying to communicate as a company. You're essentially creating an on-ramp to link their impact and work to what you're communicating.
I mean, I think of investor messaging really as just an offshoot of what are we doing to run the business. I'm an operational CFO. While it's super important how you allocate capital and resources and have those discussions, how you run the business and operate the business is super important. And I think part of my job with investor messaging is to relay that. Like, what are we working on? What are we excited about? What's the biggest challenge that we face? Trying to be transparent about that. But at the end of the day, it's the company is the one that delivers the results. I mean, I don't know if this is surprising or whatever, but people will say like, hey, how do you make the stock price go up? Or how do you get long-term return for shareholders? And my answer is always like, deliver results. Like, there can be volatility in the stock market, for a bunch of different reasons. But the one thing I'm pretty confident about is that if we can deliver accelerating growth, sustainable profit, I think investors are going to be pretty happy. I think we're all going to be happy too because of it. And the noise, on the interim basis is we can't let us lose focus or sight of kind of the long-term game.
Blake, you said that you should be willing to come back to whatever those pillars are on a consistent basis. Can you just say more about that? Because I think it's powerful to be able to say, these are the things we're passionate about. These are the things we're working towards. I'm going to give you metrics against them now, but I'm going to continue to update you on the progress. I'm not going to shift these priorities like quarter to quarter.
We're going through things like this right now, where there are certain metrics we have in our business that can be really volatile based on timing. So one of those is like when a customer signs a contract, like a billing. And so you may have a billing that starts 3 days before the end of the quarter or 3 days after the end of the quarter. To the customer, it's kind of irrelevant, right? Like they signed a contract on the date. But when you report those numbers out, it can swing things quite a bit. And so I've tried to be as transparent as I can when timing affects that for our business, and it affects us every quarter. The trick for us is we don't spend a lot of time talking about the timing of things, right? Like whenever I get questions from our go-to-market team, my first answer is always, what's the right thing to do for the customer and for the business? Let's define that, and then we'll talk about the other kind of stuff, whatever that may be at the end, because I really want to make sure that we're making high judgment decisions that are what's the right thing for a customer. And because I think that pays off for us in the longer term. But I do agree, like anytime I don't get a chance to talk to investors a lot, right? Like you do your quarter, you go into a quiet period, so you're not talking to anybody. Then it's you release earnings and such, and you go out and talk to people. But there's Reg FD, and you got to be really careful, about your communications and such. So it's, you got to use that time wisely and really try to be able to use it by communicating the metrics and the measures as a company that you use to manage your business. We're growing into that, and we've got room to do that. It should never just be like a rinse and repeat thing, but you got to be really thoughtful about it. Because also there's times where I'm going to disappoint some investors, right? While investors want more and more information, they want more and more data. There's a bunch of reasons, whether it's competitive, that you don't want to disclose something like that. Maybe it could be misleading because it's too early in the life cycle of something. And I try to be super forthcoming with people about, like, I get questions all the time about, hey, why don't you disclose this or do more? And I'll give them my reasoning for it, about why, but you have to be able to hold steady to your kind of values and what do you think is the right long-term decision, for your shareholders, and have the confidence to do that. But just providing that confidence, I think, is just super critical.
Blake, you made a distinction in your responsibilities between operating and capital allocation. How do you think that mix shift has changed with CFOs over the last decade or so?
I think that the most effective CFOs are people who can do both. I think that, when I get asked or whatever, when I got hired for my first public CFO job and then for this job, I'm usually pretty clear with whoever the people are that I'm not an investment banker by trade. Now, I can talk the language, I can get into the strategy, I can operate effectively, I think, in that realm. But I think my biggest value comes from being able to ask questions around how do we know we're happy or sad with these metrics? You'd be surprised how many people don't know. Where
That's
it's
a
like,
great line. Can you just expand upon that?
sure,
Do I feel
sure.
happy? Do I feel sad?
Yeah. And I get a lot of heat for this, at Docusign, because I'll say it in meetings. And it
Yeah.
maybe sounds, I don't know, like patronizing or what. It's not meant to be. Sometimes you can feel overly confident because you have a lot of metrics. You have a lot of
Yes.
data. And so sometimes when I stare at things, it's like, okay, that number's higher than it was last month, and that number's lower than it was last month. Am I happy about that all time? Or am I sad about that? And how does that matter to the output? So the hope is you're looking at input metrics that drive your output metrics. So like an output metric would be like revenue, right? Or something like that. Like if all you do is watch revenue, you're not driving anything, in my opinion. What you're doing is looking at the input metrics that then go to the output. And so whether it's like adoption, enablement, like reps that are selling IAM, all those components, those are the input metrics. And so I will ask that. It's like, am I happy? And if I'm happy with that number growing or shrinking, then let's push on that. Let's talk a lot more about it. But if the answer is, well, sometimes I'm happy and sometimes I'm sad, then I would argue that's probably not the right metric to manage to, because then it becomes just an output report. It becomes a weather report. The insights that you glean are what really matter. And so that's an evolution, I think, for a company, as well.
And the worst way to feel is apathetic. Just I don't feel anything. That metric's not doing much for you then.
That's right.
I'd rather be on one side of the spectrum.
Yeah. I mean, I've been in big companies where it's like the FP&A team will put out reports. And sometimes, I've been in charge and I'll say, I don't think anybody's even opening this thing, right? Like, I don't think anybody's using this thing. And so this is a blunt tool, but I've, in my prior job, said, stop sending the report and let's see who complains, right? It's like, hey, I didn't get that report. And then it goes back and says, okay, how did this report get created? What was the spirit of the request? And how are we managing it? Because I think sometimes, especially nowadays, the access to data, right, is higher than it's ever been for companies. The risk is becoming kind of paralyzed by that. And so I still think like being able to have summary metrics that matter the most, but then you can like peel the onion back a bit more if you want to get super deep. And so we're learning about that, especially as we go into IAM, which is like, oh, these metrics are kind of rising to the top for us of importance, but that doesn't mean other ones aren't important. But maybe we won't spend as much time on them because you just can't.
I got to call that out because I don't know if it's a Jedi mind trick or if you're not sure if people are using what you're producing and you're just on this hamster wheel, this treadmill of output, stop sending it. See who screams.
Yeah, and see what happens. It doesn't mean stop creating it, but because it's also like, it can be a morale killer for people, where it's like these analysts come in on a Monday morning and they assemble reports. Now we're automating these things and such, but even so, to spend the time to build that reporting is hard. And so how do you manage that correctly in order to kind of go, okay, what really matters for this business? And now I want to peel the onion. We're going to go super deep, right? And we're going to go look at, these metrics within a certain segment over a certain period of time. And I want to look at it by week. And so now you're really going to go dive deeply into it. But if I send you out a report, it's got 100 pages on that stuff. Are people really hitting that, kind of a thing? I mean, I do that to my own team sometimes where it's like, I've created reports for myself because I want them, but, they joke at me because I use them all the time. So I've learned my lesson about that.
Well, I have a theory that there's a reverse correlation between how important and impactful a report is and how long it is. Like the longer, by slide 137, you're like, okay,
yeah,
I think we've lost the plot here.
I think that's right. I think that especially depends on the culture of your company too.
Yeah.
Like I work in the early days of the kind of the Amazon's cloud computing business, AWS. We had a weekly business review deck that was 200 plus pages. We'd sit in every day, but every week. But the wrinkle on that was we probably hit the first 20 pages every time. And then the remaining 180 pages was all the services we had, like they had their own sections. It started to get to the point where we didn't have time to go through every service. And so this is back when Andy Jassy ran AWS, and he had me and I ran the finance, kind of the FP&A function for the team back then. And I came in with a, the Dungeons and Dragons die, that's got like the 20 sides on it or whatever it was. And so we had like 20 services at the time. And so every service was assigned a number. And I'd roll the die down the table, and whoever it landed on, they had to stand up and give a report on their
Are you
business.
serious?
Oh yeah. And they would flip to like, okay, CloudWatch, whatever, page 162. And that leader is sitting in the room and probably wasn't thrilled about that, right? But it was accountability now. And they may still do that. I don't even know, but they got to have like 100, services now or more, right? It was a way to drive accountability and an operational mindset in the business for services that maybe, they didn't stack up to like compute and storage and database. Like we do those every week, right? Those are the big kind of foundational services. But you have all these other ones. It drove accountability. And so people prepared, as if they were going to get called up. And I think it was one of the really interesting ways to manage a business. I think the right way in a lot of ways.
Well, you've described Amazon as a place where being detail-oriented, it wasn't optional. Can you continue to make that real for us? How did it manifest itself in the business?
I got to tell you, it was kind of crazy when I came into my very first meeting. I was probably like 2 weeks into my job at Amazon. I worked in payments. I got hired out of a consumer bank. And we went in and we had a meeting with Jeff Bezos. And the team had created this like 6-page single-spaced memo. I remember sitting in the room being very nervous, even back then with him. And it was him looking around the room and saying, read. And he just puts his head down and 45 minutes of silence. And people read this document, which was super robust, super detailed, 15 pages of charts and tables like in an appendix, including questions that the reader thinks you're going to ask and answers them ahead of time. Like after reading this document, what are the questions you think we're going to ask? Answer them for us, right? And so then it starts, and the discussion is so much more detailed than what you might have if you do like a PowerPoint presentation or something, right? Like you're just launching into a conversation which is so granular and very quickly would get to the controversy. One of the things I took from Amazon is that, especially when you're meeting with a bunch of senior leaders, let's get to the controversy of the decision, right? If you have an hour presentation and you spend the first 45 minutes kind of just telling us about how everything's going, and then with the last 10 or 15 minutes say, oh, and here's the big problem, you ran out of time and you didn't spend any time talking about it. Instead, address the controversy up front, right? We can get to all the other stuff at the end. But you get to have those real debates. And so that's, I would say, a real way. Now, it's very unique to have that kind of environment. It has to start at the top. And you can imagine teaching a bunch of engineers how to write really well-written documents is a challenge. And there's some pushback, from that. When you do it well, it's pretty crazy how effective. You have meetings that are from 2 to 3 hours. Right? Each meeting. A lot of companies don't do that. And that's kind of an extreme example. I don't think it necessarily applies to everyone, but that ownership and addressing the controversy up front, I think is just a super valuable lesson for companies to address where, we come in and we know there's a problem, but we don't start talking about it right away. I'll just jump in and say, hey, is there any reason why we can't just hop to the controversy right now? And then let's follow up with all the other stuff you want to go through, but let's have the debate. And those debates can be like tough. I just think that's addressing the controversy up front. It's a lesson I've learned that I think is super valuable.
Maybe an odd question. When everybody's reading, can you hear like a pin drop? Is it an awkward tension the first time you're sitting there?
Super silent, super quiet. You're paying attention when people are making notes, right? Because they're writing.
Oh, you can probably see on the page relative to what you wrote.
Oh yeah, everybody's writing down. Everybody wants to see what Jeff writes, all this kind of stuff. But by the end, he was pretty good about kind of leaning back, doing it so you could do that. And you've prepared for this. I think it also drives a measure like ownership too. Like you gotta know your business when you should in anything you do. The other thing I also take away from Amazon is that the more senior you get, the almost more you need to be an analyst, in that you got to be comfortable in the data and the details. Because if you're the kind of person that goes to meetings and needs to take like a posse of people with you to answer all the questions, it's like, what are you doing? Right. And so that's not to say that I think all leaders are not smart, but it's like, you have to be an analyst as well. And there might be people on your team that know the detail better than you. There should be. They know the detail better than you. They can speak to that level of detail. But if you can't as a leader, then I just don't think you're really serving the company kind of in the manner that you should.
And I've heard Bezos talk about how we use metrics as proxies for ground truths. But if you stay too far away from where they're coming from, they can drift and you start to track something that's like a derivative of whatever you had before, and you start to lose the plot.
If you become too mired in the details without kind of picking your head up and looking around, you can feel more confident than you are. I think one of the mechanisms that Jeff used to help push us the other way was the anecdotes of customer feedback, right? You probably have heard the lore about the dreaded email from Jeff that would come with just one question mark. Like a customer would write an email about a bad experience or a bad, situation they had. If it resonated with him in a way that he felt like, gosh, this actually sounds bad, and it also doesn't sound, it sounds like it might not be unique, then he would just forward it with a question mark to one of his senior leaders, who would then forward it to, the person on their team. And following those anecdotes, usually the anecdotes are right because it's customer feedback, right? Like it's, there's certain cases maybe where you got the customer and they are misunderstanding the situation or whatnot. But I would say like 7 out of 10 times, those led to issues where there was a root cause that you could fix, and you could fix for a lot of customers if you did it the right way, and you'd learn from it. And that was a great mechanism to look back at the metrics and say, we think everything's going great because this metric looks really good. Look at the customer escalations we're getting. Something's not right. And so we always had to decide if we needed to change metrics. And that would happen kind of all the time, right? You'd sit there and say, that metric that we thought was good, we don't think it's that good because of this reason. Here's another one we want to actually track instead. That's a kind of always an evolving thing.
There's this amazing story of Jeff hearing of this anecdote that it took like 19 minutes for customer support to pick up the call. And he asks the customer support director, is this true? And he says, no, it takes like 30 seconds. He says, okay, let's find out. And they're all in the room and he dials the number and they just sit there in silence while they're all on hold.
I think that was in a weekly business affair. I think that was before my time. Yeah, because Jeff, it was a bigger company when I joined there.
Yeah.
That still went on even in the regular reviews. And where it would get really, I would say tense, but important, you can imagine, was around holidays for Amazon, because kind of the whole Black Friday, Cyber Monday moments, those moments in time where you had to have everything dialed in, the whole place goes up to like, whatever, like the DEFCON level raises, because it's so important for them. And I think it's also just always questioning whether you're doing things as well as you can. I think the humility of that was super important, which is, Amazon, we'd celebrate our success, but it would be very short-lived. And then we would talk about what's not going well. I talked about those questions that people would ask, in documents and stuff. One of the questions we had to answer in every annual planning document was, what's your dirty laundry? Like, what are you doing in your business that not a lot of people know about, but you'd kind of be embarrassed about? You had to be upfront about that kind of stuff, right? And you didn't get punished for it. But the question was like, okay, great. Thank you for highlighting that. Now, also in that answer should be, what are you doing about it? Right? As well. Then what it does is it lowers surprises for you. And I think some leaders think that, oh, well, then I'm admitting I've got a deficiency. And so therefore I'm not going to be looked on as well as other people. It was the opposite at Amazon. If you were transparent and vocally self-critical, people would say, then I bet you something is wrong in your business and you're not discussing it. And so I take that also. I'm pretty vocally self-critical about things like, oh, we could have done this better or that, and how we improve. And so, but it's also maybe a lesson I learned from there.
Well, to that point, is there a habit or a ritual from your Amazon days that you think every CFO should steal?
I think this idea of being an analyst, if you're not comfortable, I would say, to this day, I will go over to a manager and analyst's desk, sit on my knees and say, pull up that spreadsheet that you had in that meeting that we were just at, because I didn't understand it and I need a little bit more treatment. Okay, walk me through the calculations. And I would say it's just because it's my job. If I'm unclear about something, it is my job to inspect it, to say, is the data right? How do I know it's right? Do I have confidence in the people that are pulling it together that it is right? And then if I feel confident, then I move on, right? And if I don't, I keep diving. It's one of those things I think that I've taken from there, which is details matter. And I think they matter more the more senior you get. And also gives you the confidence when you're talking to investors. I mean, There's a lot of very, very smart investors out there. They spend a lot of time looking at our financials and what we say and presentations and our product demos. And in order for me to have a confident conversation with them, I feel like I need to know about the business, the details. And so that's always kind of a never-ending kind of push for my end.
Everybody talks about product market fit like it's obvious in hindsight. You worked on AWS when it was launching. Was AWS obvious from the very start?
Not to me. I mean, I think it was probably to Jeff, and Andy. I think that it was, I always remember we had a very small team and we were just about to hit this growth curve. We felt like we were going to, when I joined, it was maybe a $200 million a year business, and I left like 3 or 4 years later and it was $2 or $3 billion business, right? So it was grown a lot. Now it's crazy, way bigger than that. I remember we went into Jeff and we were asking, which I thought was just nuts, was we went in to ask for $1 billion in a capital expense to build data centers, right? And fill them with servers. Your assumption around the utilization rate, like what percentage of these servers are going to get used, right? Because they depreciate over time, right? And there was like Moore's Law. And so they kind of you don't need to replace them, every 6 or 7 years. And we were just super hesitant about this bill that we were going to have. And, Jeff had us do unit economics on a server, which was, for me, that was normal for like, you sell a t-shirt, like how much does it cost to ship a t-shirt, pack a t-shirt, what the cogs cost. That's how much, so whenever I sell a $20 t-shirt and I make 50 cents, at the very end, let's say, because Amazon lived on pretty low margins, right?
Yeah.
And so now, but it was that same mentality. It was like, okay, do a server, show the rent, show the data center structure, all those kinds of things. What do you make on it? And I'll always remember Jeff saying, I know we're right on this cloud computing thing. I was in the meeting and he said, I just don't know if we're early. And so that was the trick, right? And the value of being first is huge. And so from his perspective, he was willing to take that risk, which was if we're early, then we're going to pay for it. But that's the risk we're taking because being early, especially for Amazon, which wasn't really known, right, for that kind of stuff back then. But I mean, anybody who says they knew for sure, besides maybe Jeff, Andy, and a couple other people, I wouldn't believe them necessarily because it was such a bold risk, but you could see it. I mean, I remember like I joined the finance team, there might have been 10 people or something like that. You could see it every single day, the growth of that business. And it was growing. We had no Salesforce. Like these were people
Really?
that none. No, we had to build one. I mean, I remember sitting in a room and it was with Andy and then Adam Slepsky, who at the time ran sales and marketing, for what services he ended up running, for a while as well, before leaving to go to another company. It was kind of crazy. It was like, we need a Salesforce. Let's go build one. Blake, your finance team needs to help build a compensation plan. And of course, I'm like, what? I don't have any idea. But that was kind of the fun. Like you figured it out as you would go. And so, you worked with other salespeople and things. And it was, billing. Like we started out in AWS just taking credit cards because that's how you did the regular consumer business.
Yeah, how the hell do you build this thing?
Oh, we had to build it from scratch. So we had to create a billing team, right? And I had to work with them. We were running in finance. This is like a software dev thing. It's really tricky. But, you get really big customers who would call you up and say, yeah, I'm spending, at the time, $50,000 a month with you. I'm not putting it on 6 credit cards anymore. Right? And so it was like, yeah, that's probably a good idea. We should probably get out of that. And so you were fixing the plane as you were flying it. Super fun, super hard.
Isn't that wild to think back, Blake? You may have built one of the first, if not the first, cloud comp plan for a sales rep as well as how to build for this thing.
I don't think we were that smart. Like we had salespeople who came from other, you'd hire people, right, from the Oracles and such of the world, and so they had experience with it all.
Yeah.
But it was tricky, right? Trying to figure out well, how much should be variable and how much should be fixed and what are the incentives that these folks have and how do we have them work with technical product managers? Because AWS was not just for a lot of folks, not just like an out of the box thing. Like they had to be trained on it. Now some devs knew how to do it, obviously. And so they would, kind of experiment with it. I remember being there when it was like, what if people don't pay their bills?
Oh,
right.
Yeah.
That was kind of like a very different thing for Amazon because the credit card company would take the risk, right, on somebody not paying their bill back. But if you shut somebody's AWS kind of usage down, it's kind of like the electric company coming in and saying goodbye, right? And so I remember having some really hard conversations with some really cool companies in the very early days. And, we would lean in as much as we could to help the customer out because they were so much more powerful. One of the big things that was so great for AWS at the time was, you'd get a very small startup that grew up to be a very big company. And so they would, as they scaled, that was hugely valuable. So you didn't necessarily want to turn away a lot of those because at the early days, because you might miss one of them and, they're going to remember, if you turn them off or that kind of thing. So, on the finance side, we had to be really kind of careful around that stuff. So I would, reach out to the leadership team about, okay, here's this customer, is what we're doing with them. And we were defining as we go. I mean, when I took that job, I remember, the guy who hired me asked me to move into that job for payments. And I said, I don't know anything about cloud computing. And I will always remember his answer, which was, I don't want somebody who thinks they know anything about cloud computing. Like, we'll teach you the product. Like, I need somebody who knows finance, controllership, asking the right questions. You'll figure it out. That advice was super important to me because I was leaning to not taking that position because I felt like underqualified for it. And it was something that was a huge catalyst for me, not just in cloud, but an ability to prove that I could take on bigger and bigger jobs and not be an expert necessarily in them before I took them.
You were also there for the launch of the grocery biz. What was that like?
Crazy. Like, try to run a profitable business where you shipped low selling price, so low ASP, heavy items, and many times perishable.
And it can melt.
Right, that's right. And so it's like, that was like every nickel mattered. And it was something obviously in groceries, like as Amazon grew, we knew that we would have to expand into a customer's wallet in order to continue to grow, right? Because you get a certain number of Prime memberships and then you start to hit a wall of it, right? About everybody that you can tap. And so then it's like, okay, well, I already have you as a Prime member. Do you buy your food from us? No. And so that was a huge opportunity. So, it made a lot of sense to go after it. But, I have the scars where it's like you're trying to make a site profitable and like the freezer breaks. And so somebody's got to replace their freezer. I mean, it's real small business problems for that. And then how do you do it at scale really well? And when you ship the products and like you said, something melts, like there's a ton of regulation you can imagine, especially in warm weather states around like, oh, how long can something sit on somebody's front door for before it's no good? And so what's your scheduling and all those kinds of things? Just really paying super close attention to the unit economics on that was, I call it fun, but fun because nobody else is doing it, but it's hard to make it work. And so when you hear about companies that are doing perishable, shipments very fast, I know that's a hard business to kind of crack.
If you think back on the anecdotes, was there one mistake or learning that left the deepest mark from the grocery experience?
There was one famous question mark where we were out of eggs in a state, right?
Okay.
And the email came through and Jeff very rightly asked us, I would like you to show me one grocery store in North America that has no eggs right now, right? And because we were out, right? The selection was gone. That for me was really critical. Like, so then we decided we started creating a report of like the staples. So like eggs, cheese, butter, milk, kind of like the things that people, when you go into a grocery store, you have a 100% like kind of in-stock rate. And so we would have to track that kind of maniacally, but that was getting the email about, we have no eggs in California, question mark. Was a scar I have, everybody in the business has. It wasn't to me, it was to the whole team. But it's just paying attention to those basic details matters.
These question mark emails are going to haunt me in my sleep after this.
What I would say is like, okay, let me equate it out to Docusign. Alan Tegason is our CEO. He's really, really focused on trying to provide the best customer experience possible. It's been a focus of ours. We've amped it up here recently because we think we can continue to do better than we do today. When we get an escalation, we take them seriously. And we want to know, is this our problem? Is this some third party's problem? Because this is our customer's problem. So it's always going to be our problem, right? At the end of the day, we have to take ownership for it. I really appreciate it that he'll send these around when he gets them, because he'll post on LinkedIn and somebody will say something. And that's great that people have that, venue to do that. And we'll see. And it could affect my own team, which is, hey, maybe it's like a billing issue. Now, my team doesn't actually like necessarily deal with customers when they call in with maybe always with problems, but we do sometimes. And so it's like, oh, and here's the setup and we set up their account wrong. And so therefore it didn't go into this workflow. And it's, when I work with my team, I was like, well, now that's our problem. Even though it's like the system worked as it was designed, the system's designed wrong. And so let's work with the business team about how to go fix that. I think using anecdotes to run your business is really important. We're fortunate that we have such a large customer base so we can hear about those. And especially when they can pick off that low-hanging fruit and make an experience better for a large number of customers. That's awesome. You can do that.
This will show how much I was creeping on you, but I was looking at your LinkedIn, and way back a long time ago, you'd posted something around, I'm proud of our Q2 or whatever, our operating results. And some guy out of nowhere just writes like, I've been asking for a refund on this or that, blah, 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 blah. It wasn't worded in the nicest way. He clearly was using the CFOs if you were customer support. Right under it, like 5 minutes later, Blake, you wrote, I'm looking into this immediately. We'll get back to you soon. I was like, damn, this guy's like in the trenches, taking it seriously. This is awesome to see.
Yeah. Well, thank you. I think it's, I don't get reached out too much because my job's not super customer facing, right? More investor.
No, but still.
But the lesson is set by Alan and our leaders in that when they get an escalation, that's how they act. And that's how we all should act, I think, at companies, which is we shouldn't take our relationships with our customers lightly. We talk about this all the time. Our, over 1.7 million customers is a huge asset for us. We appreciate them greatly. Our success in the future is going to come from getting them to use us even more. And so how best to do that than to hopefully create good relationships with them and deal with things when they have problems.
This is a good segue into what we like to call our long ass lightning round. So gearing towards a close here.
Okay.
You're a successful guy, but I ask everybody who comes on the show, give me one thing that you've messed up on the job before. It could be here or any other company.
My biggest mistake in my career was not actioning like a incredibly bright yet toxic person in my, on a team that I have. In that, like, the best thing I can do as I get up further in my career is who do you hire and who do you manage? Because the success of your team dictates your own success at a certain point in your career. And I'm well beyond that now because I can't individually do a bunch of stuff. And if I am, that's wrong, because then you're too dependent on me, right? I have to create a mechanism where I've got great people that are learning and driving the business forward. And I've had a person on my team, this is earlier in my career, that was very, very intelligent, right? Incredibly bright, actually, but was toxic to the org. And it took me way too long to deal with it. And it brought morale down and it brought my own reputation, I think slipped a little bit because of it. And I learned a big lesson there about dealing with problems as they come up. Forget if it's HR, personnel or not, anything. There's the old adage, rip the Band-Aid. You can peel it off over time and it's going to hurt the whole time you do it. Or you can just make the choice, figure out what that decision is going to be, make that decision and move accordingly. And I think it served me well in way other facets of the business that I work on. But that was a lesson I learned early on.
Thank you for sharing that. And you notice the longer you're in the game that intelligence isn't everything. I think I would over-index for that with a lot of candidates early on. But if they don't gel with the rest of the team, it's actually a net negative. Next one I got for you. If you could give your younger self advice knowing what you know today, what would you tell him?
Gosh, I would tell him your career is not going to look anything like you think it is going to. So don't sweat it. I go through this. I have 2 daughters that are in their early 20s and, they're out of college, they're in the workforce. And sometimes when I talk to them, it's like they think they're going to be in that job that they're in for the rest of their lives. And my answer to them is, that is the one thing I can guarantee you is that will not be the case. And so learn from it, make sure you're learning, right? Hopefully you have a good manager, you can find one, but don't get too hung up on that first job or two, because where you go is just kind of this roundabout process. And as long as you're continuing to learn and gain the skills for the next job, you're way more valuable and it works out typically.
When you're evaluating a candidate, do you think there's a minimum number of years somebody should show in any spot?
Not necessarily. I think I need to know the story, because I think for me, it's what was their logic that they used, right? If it's clear about what the logic was, whether it was, this industry experience or this manager experience, wherever, you can have those things. I think sometimes where the risk comes is, you'll run into people where it's always somebody else's fault, about something. And so you just want to probe on that a little bit, because at some point it's our own fault. And, and what are the choices we're making when we go somewhere? I would also say 9 times out of 10, when I talk to younger people, and they reach out to me asking for advice and stuff, if the word money is the first answer, that is, I try to reset if I can, because in the long term, it likely pales in comparison to what you think it's going to in the short term. Doesn't mean that, you're going to make a lot more necessarily, but you're going to look back on that decision 20 years from now and go and say to yourself, why was that the reason that I went from job 1 to job 2? That's hard because at the time, that's what you're focused on. People want to do well. And I appreciate that. And that's what people want to be successful about. But I definitely think just having that perspective of saying, how am I learning? How am I becoming more valuable? How will this job help the next job? I ask people that a lot when they're asking me about, hey, I have a job offer or whatever to go over here. It pays more. I want to take it. My first question is, well, okay, what job after that are you thinking about in that process? And if they haven't even thought about it, my answer is usually like, why don't you think about that? And if it makes you more valuable for that next job, then you should consider that because that sounds great. But if it's not, if it's just a pay bump, then what are you getting out of it? And are you going to be happy, later from that?
I love that because every job can be a setup for something after that.
It should be. That was like for me when I was at Amazon and I was in payments, I don't want to call myself an expert, but I could hang with the product people, because I had the background in banking. I got asked to do cloud computing and I hesitated because I didn't know. But then I sat there and said, who is ever going to call me for a finance cloud computing job? Nobody. This is my one chance, I thought, to take that. And I did that. And then the next job I took, I went to consumables and it was like health and beauty products again. And, I remember telling Andy when I left AWS, he said to me, you're going to leave cloud computing to go sell diapers. And as a joke, but it was for me the learning, like who's going to hire me into that kind of a CPG job? Like that's another arrow in the quiver for me. Then I was able to show that I could adapt. And then I did a job in a marketplace after that. And then I did international after that. And so that was a place where I think taking that first step out of cloud computing was huge for me because I could have stayed in payments my whole career there. I think it would have kind of limited, I know it would have limited my ability to kind of get bigger scope in my jobs. So you kind of got to take those risks, that are calculated and you think about them. But anyways, that's some thing I've learned over my life and career.
Thanks for sharing that.
Sure.
Next one I got for you, more of a technical one. What tools does your finance team use to get the job done today?
Oracle's kind of our largest, probably software partners in finance. Like we have like a cloud-based ERP, we have EPM. They do a little bit of subscription management for us for part of our business. We just launched Oracle EPM, to help with account reconciliation and close. So I think just the automation of all that has been super helpful and should be even more and more helpful. I think, we've leaned on kind of robotic like bots, like kind of process automation for heavy manual tasks, especially you can imagine in like, with so many customers and so many renewals, it's hard to have humans touch on all that stuff, right? And so when you have like standardized deal renewals that don't have custom terms and these kinds of things, you can use bots essentially to benefit from it. We use IAM for enterprise. So like we use our own product now, specifically mostly in our procurement side of our business for our agreements to be able to, track vendor relationships and stuff. So I like that, not just because we're using, what's the term, eat your own dog food, but being able to find value in that ourselves. I'm trying to think of other finance tools, we're a Salesforce, obviously shop and we use that for CRM and then, like back to Nos, we use Workday, as well. And so all that I think has really helped us out.
Nice. Drink your own champagne. That's what I like to say.
That's probably a better way to say it. That's the more conservative side of the CFO in me, which is like, hey, why don't we do this? When we talk about it here, we have a program we use, which is called Docusign on Docusign.
Nice.
Right? And so how do we use it? And so we're pushing ourselves just like other, really large enterprises to say, okay, how do we use this? What's the feedback that we got? Like my own team takes IAM feedback and goes back to the IAM product managers. And it's, you can imagine like enterprises care about access controls, right? There's a lot more complicated stuff that goes on the back end. I think sometimes like we were talking about earlier that people don't necessarily know. It's like, okay, I have all the documents now for our company. Do you want every person in the company to have access to those?
Probably not.
Probably not. Certainly not, right? In some cases. It's just like, okay, how do you then kind of link it up? And so we have that ability to link up with your own identity access kind of management protocols in your own company and enterprises to be able to provide that. And is it seamless so that when an employee leaves the organization or switches jobs, like how do you do that? So there's a lot more stuff in the background, I think, that people don't necessarily know about. And I think that's actually kind of okay in a lot of cases because you want customers to really see the end value, but the people who are buying from us need to understand about all those kind of features and like specific services and benefits that we can provide on top.
Last one I got for you, a fun one. What's the
Okay.
craziest thing you've ever had somebody try to expense?
Like an expense report?
Yeah.
I mean, off the top of my head, I would say
There's got to be
I
something from Amazon. Was it the eggs in California?
so at Amazon and/or another company, I'll give you two. One was I had a person who went on a business trip to New York, and not only did they stay at like a 4-star, way nicer hotel than we were allowed, but they did a different one every night because they wanted to check out all the great hotels of New York City. And I think it flagged to me for a very weird reason. I dug into it and I was like, this is nuts. And so anyways, that was one that was funny, not funny. The other was like a super high-end luxury car rental. So like,
Oh, really?
somebody decides, hey, this will be fun, and they rent it, and then now it's like, no. And so I would say those are the two probably craziest. And, here's an example, like those are anecdotes where I took that anecdote and I, just nicely go to that person and their manager and say, hey, I'm going to give them the benefit of the doubt, right, to start and say, one, do you recognize that's not part of the policy? And just want to make sure that you understand that. And here's what our policy is, that kind of stuff. You do that kind of thing. It does set a tone, right? Which is like, do the right thing. Like that's also too, like I hate to be a stickler for like you have to adhere to every one of these policies verbatim to the $sign or whatever.
Mhm.
It's more about, are you going to do the right thing? Would you be okay if your seatmate knew that you were doing this? Because this is company money and you're both owners, let's say, of the company. Would you be okay? If the answer is yes, that's probably going to mean like it's probably all right. You know what I mean? Like, or if a group of people knew about it, if you would be embarrassed to tell somebody about that. And so like if you're in sales and you take a customer out to a nice dinner and that's part of the thing, they shouldn't be apologetic about that, right? Sometimes that's what it takes. But if you're doing it just with you and a coworker and there's not a reason necessarily to do that, would you be embarrassed? Maybe. Use better judgment. And I just think that it may sound like, I don't know, like too holier than thou or not, but I kind of live by that adage, which is like, do the right thing for us and the company. It'll generally work out, but we'll still, manage the details and make sure we're doing things appropriately. But no, those are two kind of funny things maybe I can think of off the top of my head.
Do you remember what type of car it was?
I don't, but I do remember at the time it was expensive, like over a decade ago, right? But it was like for one day, and it was, not $1,000, but it was up. It was up there enough to be able to say, and to be frank, the way I catch it in a place like that was because we had kind of rules in place, right? Where I would get a report that would say, I would set rules like rental cars over X or hotels over X or these things over Y. You get a data dump, the kind of, and so I just would look at the top and go, okay, that looks strange. And so, but it was funny kind of in a way for you. Now you got to treat it with the right seriousness, but no, I don't remember the brand.
Well, Blake, this has been an absolute pleasure. Thanks for carving out time for us.
Yeah, thanks so much. I really appreciate it.
Run the Numbers is a mostly media production. Yelling and intro by Fat Joe. Artwork by Meg D'Alessandro. Show is executive produced by Ben Hillman. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog way too much ice cream and has a history of net operating losses. LOL. If you like this podcast, hit subscribe and give us 5 stars. It will take like 2 seconds and our algorithm overlords love it. Drink water, call your mom, and have a great day. Peace.